Ever wonder what actually happens when you deposit your money into a bank? It's not just sitting in a vault, guys. What banks do with your cash will surprise you. And it affects your life more than you think. We're talking mortgages, car loans, even that avocado toast you put on your credit card. It's all connected to this system that most people don't even understand. But don't worry, I'm here to break it down for you. In this video, we're going behind the curtain, exposing the secrets banks don't want you to know. By the end, you'll understand how banks work, how they make money, and how you can use that knowledge to your advantage. Let's get started. Ever wonder what actually happens when you deposit your money into a bank? It's not just sitting in a vault. What banks do with your cash will surprise you, and it affects your life more than you think. Let's uncover the truth behind how banks really work. Look, banks have been around for centuries. Why? Because they solve a fundamental human problem: how to safely store and move money. Think about it. Back in the day, merchants were guarding their gold coins like their lives depended on it. It was risky and inefficient. Enter banks. These institutions became central to the economy, providing a secure place to deposit your hard-earned cash. But they didn't stop there. They realized that money sitting idle wasn't doing anyone any good. So, they started lending it out to businesses and individuals, charging interest and jump-starting economic growth. Today, banks are more sophisticated than ever. We've gone from medieval vaults to digital apps, but the core principle remains the same: connecting those with capital to those who need it. But here's the thing. This system is built on a delicate balance of trust and, let's be honest, a little bit of leverage. You deposit $1,000 into your account, right? You probably think it's just sitting there waiting for you. Wrong. This is where things get interesting. See, banks operate on something called fractional reserve banking. In simple terms, it means they only keep a fraction of your deposits on hand. The rest, they lend it out. Let's say the reserve requirement is 10%. That means for every $100 you deposit, the bank keeps $10 and loans out the other $90. Now the person who borrowed that $90 might deposit it into another bank, which then lends out $81 of it, and so on. This creates a ripple effect, multiplying the money supply in the economy. It sounds crazy, right? But this system is literally the backbone of modern finance. It allows businesses to grow, people to buy homes, and the economy to keep humming. But it also means that if everyone decided to withdraw their money at the same time, well, there wouldn't be enough to go around. That's where trust and regulation come in, but we'll get to that later. Okay, let's talk about how banks actually make money. You know that 0.01% interest you're earning on your savings account? Yeah, that's not where the real action is. Banks make their money on the difference between what they charge for loans and what they pay you in interest. It's called net interest margin. Think about it. They might lend out your money at 5%, 10%, even 20% or more for things like credit cards. That difference? Pure profit for the bank. But it doesn't stop there. Banks are like financial supermarkets. They want to sell you everything from checking accounts and credit cards to mortgages and investment products. Each of these comes with fees, charges, and opportunities for the bank to make money. Now, I'm not saying banks are evil. They provide a valuable service, but understanding how they profit is crucial for you to make smart financial decisions. You need to know the game they're playing so you can play it better. Chapter 4, the Federal Reserve, the puppet master of money. Ever heard of the Federal Reserve? It's not just some boring government agency. This is the big leagues, folks. The Fed controls the money supply and interest rates, which influences everything from how much you pay for a mortgage to whether businesses can hire new employees. They don't lend money directly to you and me. They work through the banking system, setting the rules of the game. One of their main tools is adjusting interest rates. When they lower rates, it becomes cheaper to borrow money, stimulating the economy. When they raise rates, borrowing becomes more expensive, which can slow down inflation. The Fed also has the power to print money. Literally, it's a bit more complicated than that, but essentially they can inject more cash into the system. Now, this can be a good thing in times of crisis, but too much printing can lead to inflation. The point is, the Fed wields enormous power over the economy, and understanding their actions can give you a leg up in your financial life. Chapter 5. Bank runs and the importance of trust. Remember what I said about banks only keeping a fraction of your deposits on hand? Well, that system works great as long as everyone trusts that the bank will have their money when they need it. But what happens when that trust evaporates? You get a bank run. We saw this happen recently with Silicon Valley Bank. Depositors panicked, rushing to withdraw their money all at once. The problem is, there simply wasn't enough cash on hand to meet everyone's demands. This can lead to a cascade of bank failures, as people lose faith in the entire system. This is where the FDIC comes in. The Federal Deposit Insurance Corporation insures deposits up to $250,000 per depositor per insured bank. This helps to maintain confidence in the banking system, knowing that even if a bank fails, your money is protected. But the real key is trust. Without it, the entire financial system is built on shaky ground. Chapter 6. Fintech. The disruptors at the gate. The banking world is changing faster than ever thanks to technology. Fintech, or financial technology, is disrupting the traditional banking model with innovative apps and services that are faster, cheaper, and more convenient. Think about it. You can send money to friends with Venmo, open a checking account with Chime in minutes, or even invest your spare change with Acorns. These fintech companies are challenging the status quo, forcing traditional banks to adapt or get left behind. But here's the catch. Many of these fintech companies still rely on traditional banks behind the scenes. They might partner with a bank to hold your deposits or process transactions. So while the user experience might feel different, the underlying infrastructure often isn't that far removed from traditional banking. The future of finance is digital, but the role of banks in that future is still being written. Chapter 7. How it affects you. This is personal. Okay, so we've covered a lot of ground. But why does any of this matter to you? Well, banks play a huge role in your everyday life, whether you realize it or not. Want to buy a house? Get a car loan? Start a business? Banks are involved every step of the way. Your credit score, which is essentially a report card for your financial health, is heavily influenced by your banking history. Banks use this score to determine your credit worthiness, which affects the interest rates you qualify for, and whether you get approved for loans in the first place. Understanding how banks work gives you the power to make smarter financial decisions. You can negotiate better rates, choose the right financial products, and avoid costly mistakes. Knowledge is power, especially when it comes to your money. Chapter 8. Be an informed customer, don't be a sheep. Look, I'm not telling you to become a financial expert overnight, but I am saying that you shouldn't be passive when it comes to your money. Don't just accept whatever the bank throws at you. Negotiate fees, shop around for better interest rates, and explore alternative options like credit unions. Take control of your financial future by being an informed consumer. Read the fine print, ask questions, and don't be afraid to walk away if you're not getting a good deal. Remember, banks are businesses, and their goal is to make a profit. Your goal is to make the most of your money. And hey, if you want to learn more about how to master your finances, be sure to check out my next video on smart credit card usage. I'll show you how to boost your credit score, earn rewards, and avoid common traps. Subscribe and hit that notification bell so you don't miss it. Liked what you learned? You'll love our next video, Smart Credit Card Usage. Click to learn how to boost your score, earn rewards, and avoid traps. Subscribe, share, and let's take control of your money, one smart move at a time.